Hi guys, it's Burp here and welcome to today's exclusive video report. And today, briefly, I'm going to introduce a couple of timeframes, different timeframes analysis for Bitcoin USD spot price, accounting for what's been going on, for the carnage that's been going on very recently, especially with the thorough acceleration to the downside. And just to kick it off, let's give it a deeper dive into the weekly chart. This is a naked chart, right? So as many people would refer to it as a price action analysis. And of course, many of you would know that, I've been accounting for this main kind of like a chart pattern that Bitcoin has resembled, well, for over a year and a half already, to be honest, right? So we are talking about the sequence of 2022 opening with a crash into the $28,000, followed by a rally into $65,000 in April, May. In April, well, accounting for the entire pattern reversal out there for the entirety of a couple of months, but accounting for the 10th of April, if I'm not mistaken, for the very peak day of 2021, then the bottom on the low end of the pattern in quarter 3 through the summer of 21, then followed by a rally into $69,000 new highs, which later actually were broken to the downside. The support didn't hold really well. And then we have just received the new lows as that $33,000 mark kind of like got broken, right? So all things concerned, we're talking about a chart pattern that is kind of like trapped between the two boundaries, namely the highs of $65 to $69,000 and 28 to $30,000, right, as a main support region, if you will. So well, I'm calling it a chart pattern because it's clearly low on the momentum side, right? You can see that a lot of these, longer term averages are either flat, relatively flat, or they kind of like move, in this some form of a sine curve, kind of like a sideways idea, right? And this sine wave kind of like idea of a chart, like is exactly what stays under or behind the scenes of a chart pattern, right? Chart patterns are sort of like interruptions in the trends. Chart patterns are not trends themselves. The trends are understood as a consequent chain of higher highs and high lows, right? Moving in sequence and consistent and pursuing one direction consistently, or for the downwards trends, it is basically a sequence of lower highs and lower lows. When we get neither of these, either consequence or consistency in the upwards or downwards direction, we have formed certain sideways patterns. Some sideways patterns, chart patterns, are take more or less geometric shapes, as in some triangles, as in contracting consolidation coils, or expanding consolidation as some form of embedded coin patterns, or some megaphones, no matter how you refer to it. But one way or another, we are talking about the sequence of inconsistent movements, right? Some chopping around, like higher highs but lower lows, right? Or lower highs but higher lows, some contracting form. And neither of these resemble or belongs under the category of an upwards trend or a downwards trend. And if you have a look at a just trend-wise basis, we're still talking about ascending sequence of $65,000 high in April, 28,800s June, July, $69,000. Right now, we're still kind of like, although we freshly broken through $33,000 support, stopping somewhere right at a $31,000 support so far intraday. Of course, this can change, but we are still talking about unbroken region of 2830, which remains the main support to kind of like hold any sellers above this. So if you ask me, we are talking about it still ascending chain, right? Still ascending sequence, as in $65,000 high, then 28,800s, $69,000 high, and we are somewhere over here, right? So this is a clear combination of higher highs and higher lows until you get a proper close below the 28,800s. If that happens, I would argue the Bitcoin chart resembles and enters more into the bear market phase, right? Potentially projecting for lower targets. But until that actually happens, well, the market remains relatively flat, right? You can tell that it is pretty much exactly where it was, at the start of 2022, or in summer 21, or in beginning on 21. We keep chopping around the very same places. I keep returning to the same price regions, uh, well, with little to no consistency, right? It's some more or less random chaotic movements. So, accounting for the fact that we're still kind of like, again, moving in this ascending sequence until we get a proper breakdown below 28,800s or lower, I would argue Bitcoin still moves in the form of this, you know, chart pattern which is upwards oriented. The market of course has slowed down if you compare that with 2020 increase, right? Because you get a proper shot into the $65,000 highs of the $4,000 COVID lows, and then you have entered the phase of chop. It's been lasting for a year and a half already. It's pretty wild. But as long as you do not really get a proper close below 28,800 and $30,000 region, right? You could argue that there needs to be a proper accounting for this region to be maintained as a support. Of course, the past history, the historical records are not a guarantee of future performance, but you could argue just based on the technical analysis principles that just because the price had favored this region for potential bounces, you could argue that there is certain probability of potential bouncing to this higher area, or at least that it does not favor necessarily opening a new selling positions into this region, right? It doesn't if you ask me, then sellers who already decide to actually get a sell on Bitcoin right now, as of now, arguably are looking at entering at a 60% discount, accounting a drawdown accounting for the highs to the local lows, and it's usually not really uh, the most favorable kind of like price objective, or should I say the entry level, right? You usually want to sell off usually at around the peakish and resistance based areas rather than supports. So even if we account for real quick for the moving averages side of the things, you're looking at 20-week moving average here, which is basically right now at around $40,000, showcasing sort of like a filtered, you know, noiseless price that is said to be fair, uh, accounting for historical records over 20 past weeks, 20 past periods. So the further it deviates to the downside against this average, the more mean reverting opportunity it generates, and and basically brings. If we study for the past cases, you're looking at a 20-week average, which actually had remained unbroken for the entirety of 2020 until the period in the entering into the mid of 2021, right? For the entirety of the time, the market had remained trading over this average, and the breakdown below its average, of course, caused a sudden disruption to the trend and a major violent sell-off. So all that things concerned, you're looking at a situation when the mean reverting strategies, the momentum strategies, tell you that the further the price of Bitcoin deviates to the upside against its fair average price, right? Just like it was here, for instance, then the higher the chances are for the reversal. On the other side of the things, the further that to the downside it deviates against its average, the more chances are for the reversal to the upside, right? So if you ask me, we're looking at a potential area where you would have a lot of confluent, congruent ideas for potential reversal forming around those regions, 28,800, 800s, 30,000s, and above everything, I think it's very important to account that the levels are not ideal, right? Technical analysis or nothing in this really world is ideal ever. And you can get set an approximation, as in just because somebody draws a line in the 28,800s, it doesn't mean it cannot go like $5 below, right? But even if you get this sort of like a thing, selling into extremes, extreme panic historically has been proved to be rather poor strategy, if you ask me. And the historical records usually show that the crowds are usually wrong in the extremes. So if you're planning to join on the selling climax, on the selling panic, on the overall mad euphoria from the bearish side of the things, then you usually are going to underperform those who actually had done it either before or those who are actually opening the contrary positions. So the contrarian trading would probably well, tell you and potentially line that if this, if this is supposed to be 2,800 or 30,000, it may slip even slightly below. But even if it gets, I would get very cautious about opening shorts freshly there until a week or a month closes below this level. Otherwise, you often see this sort of like a bear trap where the bears are getting extremely greedy after selling into extremely cheapened asset. And Bitcoin has cheapened a lot, of course, has gotten way cheaper than it was recently. And usually you are looking at these kind of like fake breakouts, just similar to the one that you had on the very peak, right? And those failed breakouts, failed patterns usually tend to commit to a larger move in the opposite direction than the anticipated one.